Good morning, you guys. The one fun topic to talk about today is homeowners insurance. I know you're just so excited, right? I'm just kidding. So I know there's a lot of stuff going on behind the scenes that a lot of people they don't know about. So I'm here to share it with you. And if you've been following along with me for a while, you know I did, back in October of 2023, we were talking about, this is when State Farm and all the major insurance companies were starting to leave California and no longer renew policies and no longer write policies for homeowners or auto insurance, anything in California. And a lot of it had to do with Proposition 103 that was passed. I can't remember if it was like the 80s or early 90s that it was passed. From what I hear, is actually more for auto insurance, but it was designed so that you cannot, that insurance companies could not increase their rates more than a certain percentage. Like there was a calculation involved, so they couldn't just increase rates and do whatever the heck they wanted. Like there's a specific protocol that they have to abide by if they want to operate in California. So that's the biggest thing right now is, again, this calculation doesn't really come into play so much with the, what is this guy doing? I'll just go this way, hold on. It's not calculating the whole percentage of what it would actually cost in California for insurance companies to operate here in California. It's just not, at the point now, it's not lucrative for them to even operate here. Like they can't afford to work and operate in California and write policies and offer, all the things based on the way that the rates are calculated right now. So it's impossible for them to operate here. So that's why they're leaving and they're no longer writing policies. And then another factor that a lot of people don't realize is the California Fair Plan. Now, I know it's the not so fair plan. I hear that a lot, but one of the biggest things that I'm hearing is that a lot of people think, even like I had a, like Realtor.com, I'm on their like weekly newsletter or something, and they were talking about how it's a California funded program. And I'm like, whoa. Even Realtor.com has it incorrectly. It's actually not a state funded program. It is, actually funded through all the various companies that operate in California still with the homeowners insurance. So State Farm still is in California. They're just not like trying to expand and get bigger and rewrite policies, all those things. And because they own whatever percentage that they saturate the market in California is the percentage that they have to pay into this California not so fair plan. So if, like, for instance, State Farm had about a 30% foothold in California. So they have 30% stakehold in that California Fair Plan they have to pay into and have to pay towards policies and things like that. So it gets really expensive for them. And so if they expand their business, they're going to have to pay more into this California Fair Plan. Okay, so that's how all of that works. And that's why you're not seeing any of movement really since, I know we were talking back in October of 2023 about the beginning of 2025 is when we should start seeing some movement with legislation and things like that, and amending that Prop 103 to allow for homeowners insurance to be calculated different and have the premiums be a little bit more comparable to how, like wildfires and all the various things, perils that happen now, that it needs to make sense for insurance companies to operate here. But now we're ending, the first quarter of 2025, and I just talked to one of my insurance brokers, and he was saying that, we are seeing some movement, but it'll probably be another 6 months or so before we see any change actually happening. So basically right now our options is the California Fair Plan and then some DIC insurance. It's basically like any additional coverage that you would need outside of that California Fair Plan that would actually cover your dwelling. And then there's also some other things, which I get a little bit nervous hearing. I think I've said this before, where you can do policies where it's like an 80-20, where it'll cover up to 80% of the total loss on your home and you have to have the other 20%. So sometimes that makes sense for certain people that might be something that you do. Maybe you're selling your house and you have a lot of equity that you can put a chunk of change aside, so that way every month you're not having to pay more into your insurance premiums. That is an option for you. But again, I highly advise, if you're going to do something like that, make sure that you have that money set aside and you actually do have that, because just like Murphy's Law, if something bad could happen, it probably will. Okay, so don't shoot yourself in the foot and have that issue where, you know, you buy this brand new house, all of a sudden some crazy wildfire comes through and takes it, and then you have to come up with 20% on top of all the other things that you lost, right? That's not something that you want to be in a position to have to worry about. And then also another part of it too is you can increase the what you have to pay for your deductible. You can increase that. I've heard, you know, as much as like $10,000 that you could have, again, set aside for situations, so that if something happens, you're not having to file a claim for every little thing unless it's over $10,000. So that's another way to kind of reduce your rates as well. So I hope this information helps. I know it's not what we want to hear yet, but hopefully within I'm hoping even like the next 3 to 6 months that we'll start to see some movement. So I'll keep you posted here on my website or on all my channels and things. So keep following along with me. If you have any specific questions, or if you'd like to reach out to me directly so that you can get this information weekly updated, let me know and I'll leave my information below. Have a great day, guys.